Macro data of the month, retail inflation eased to 1.54% in September. This is the lowest reading in more than 8 years. Latha Venkatesh is here with all of those details to decode those numbers for us. Latha?
Well, it's as per the CNBC-TV18 poll. Our poll had thrown up about 1.55 thereabouts. It's coming in at 1.54. One should remember that this is way lower than the Reserve Bank's mandate, which is to keep the inflation between 2 and 6%. Basically, keep the inflation at 4% plus or minus 2. It is below the lower bound, and that's very significant. The reason for this is primarily food prices. Food prices have fallen with a thud. It is the fourth month of negative YOY food prices. That is a fall in food prices. It is minus 2.28% lower, the food inflation for the month of September. As you can see that we are in negative terrain all the way from June. And, if you look at individual items, there's practically nothing that has risen except a little bit of rise in fruit. Otherwise, cereals have fallen month on month very sharply. And, of course, year on year as well, we have a fairly big... cereals, pulses are important because they're an important source of protein. That's down minus 15% year on year. Cereals up 2%, meat and fish up 2%, egg up 2.7%. None of the food items are up more than about 2%, and many of them are down double digits year on year. So this is a significant reduction in food inflation. It will not even end here because, we have a very big base effect coming up in October as well. And therefore, we are going to see definitely another month, if not couple of months, of negative food inflation numbers. The one that's pushed up the inflation a little bit, taking away the negative impact of food, is core inflation. That's coming at about 4.5%. It's a little difficult to talk about core inflation because many people have a different view on what you should include in core. Basically, services are included in core. What is not importable is included in core. It's non-food, non-fuel prices that are included in core, and that's up 4.5%. The reason why it's up is because year ago, core inflation was very low. It was 3.5%, and therefore, the low base also makes the core inflation look big. Now, what is the other big takeaway, other than the low food inflation from these numbers? The average. If you take July, August, September, the Reserve Bank always forecasts the average. The average it forecast for July, August, September in the previous policy was 1.8%, which was a big drop from some 2.7% that was the previous forecast. It had brought it down drastically. And guess what? Now, after we get the September number, the average has fallen to 1.7. So inflation is undershooting the already drastically cut forecast of the Reserve Bank at 1.7%. The expectation is the October inflation is going to be even lower than this 1.54. It is expected to be about 0.6 or 0.7%. So when the Reserve Bank goes into the monetary policy on December 6th, they will have two inflation readings, both of which will be seriously below the lower bound of their inflation mandate of 2%. So guess what they will do? The market expectation, of course, is a repo rate cut.
All right, Latha, many thanks for taking us through those details. Now,